Hi, welcome to this video day. See, 1st of September, it's Sunday. We're just going to be looking at the stock market today and some key events coming up which could have a big impact in the Forex markets next week. Now, in terms of Forex trades, best trades to look out for, I'm going to do one in this video, which I think looks a great risk reward trade, which is USD SGD. Now, I did do on Thursday a video that covered numerous pairs, which you can go and check out. My view hasn't changed. All those trades we're in are going quite nicely at the moment, so I'm hoping that's going to continue. So I'll put that video link beneath this one so you can go and check it out if you wish, or it's 2 videos back. Now, in terms of volatility in Forex markets, it started to pick up. Next week, I just think it could pick up a lot more. Now, just going to go through why you should keep your eye on stocks, some key events, then we'll move on and look at USD SGD. But let's go and take a look at the chart of the S&P 500
right
first.
Just on the chart of the S&P 500, and it's well worth keeping an eye on next week. I've just made a note up here. Bond markets already point to a recession coming in the US, but we're still not far from multi-year highs, are we? Now, in terms of what we've got at the moment, you can see it here. I've drawn a couple of levels. Got very erratic price action within this range. Okay, you've got a kind of period of indecision, so to speak, and which way we break will have a big influence on the Forex markets next week. If we break higher, I think the risk currencies will be stable to slightly up maybe. If we break down through this level here, clear of 2850, then I think you'll see the safe haven currencies really soar. So the Japanese yen and the USD, obviously if you look at our other video, we're heavily long of the yen and dollar, and had some really great profits out of those positions. But could be a lot more to come. You see the volatility really pick up, in my view, if we break down. Okay. Now, in terms of key events, I've just listed some out here that I feel important. Today we've got US imposing 125 billion more in tariffs on China. China retaliating with 75 billion. I know that's expected, but it's reality now. Okay, there's no soothing noises coming from Donald Trump or the Chinese about this is going to end anytime soon. Now, in terms of had some Chinese data on Saturday. Purchasing Managers Index PMIs, leading indicator in the economy, fell to 49.5 from 49.7. It's below the 50 mark, which indicates contraction. Now, in terms of Chinese today, they've said there's more stimulus coming. I don't think that's really going to make anyone optimistic about what's going on in China. Stimulus now is going to have little impact. Okay. Tomorrow from China, get the manufacturing PMIs. They're expected at 49.8 v 49.9 previous. They could have a downside surprise. Not going to be very good on the upside, I don't think. So China, in deep trouble. Okay, and with trade wars, with them just ongoing at the moment and no solution in sight. Even if we do see some upside in risk currencies, it's just not going to be big, in my view. The actual trade wars themselves, I just don't see them being solved. And we'll come to Donald Trump's attitude in a moment. What else have we got to look out for next week? Well, on Tuesday, we've got the RBA, Royal Bank of Australia, obviously, to meet. Rates expected to remain unchanged at 1%. That's expected. You never know, they might cut. China just such a massive influence on Australia. We saw New Zealand cut, and no one really cut more than expected. And the RBA might do so. I mean, it's expected that they're not, but be alert for a surprise. Bank of Canada on Wednesday, rates again expected to remain unchanged at 1.7%. Personally think they probably will stay on hold, but they are going to indicate rate cuts further down the line. I don't see much upside in either the AUD or the CAD. Gone down nicely on the USD and the yen, and I'm expecting them to go down on the British pound as well, as per my sort of round up on Thursday. We've got USD PMIs on Tuesday, 51 v 51.2 previous. Non-farm payroll on Friday, 159 v 164 previous. I don't think the US data is too important. I think it's more important the data from other countries. I think, yeah, if the US data does surprise to the downside, that's bullish for the USD. It's just showing that the world's biggest economy is slowing up. So the USD will gain, yeah, because it's a safe haven. It's better than expected. Still shows the US economy is the kind of best of global economies at the moment. It's not doing great, but other economies doing far worse. An interesting one to look out for will be Christine Lagarde. She's going to be the future president of the ECB, and she's going to do a speech on Tuesday. Now, in terms of Christine Lagarde, I did post something in the Facebook group about her. How she has become leader of the ECB bemuses me. She's got a criminal record. When she was finance minister of France, she basically gave them a ruinous budget deficit. She gave Greece the biggest recession in history. She organised a failed bailout for Argentina. And she has no experience of monetary policy, and she's heavily in favour of negative interest rates and stimulus. And she's going to be taking over after Draghi. I think it's next month, isn't it now? She wants to go big in terms of printing money in Eurozone, forcing rates even more negative. And I think that could, basically, reinforce the difficulties, let's say, that Eurozone has and pressure the euro, which it's already under a bit of pressure. So look out for that speech. Trump's focus on trade wars and state of mind. He just doesn't want to back down, and he seems to me to be getting a little bit more confrontational. Something that interests me is he had to go at Fox News Network, which I think have always reported him quite fairly. Yeah, he feels on his own, and I think he wants to really prove the point that he can get this America First policy to really be successful. He won't back down, and I think he's going to soon pick on Europe. I don't know when it's going to come. He picks on Europe with tariffs, could come at any time. It's just so bearish for the euro. Also worth keeping on is Hong Kong and the China response. I'm sure you've seen the news reports and the videos. Hong Kong, a lot of riots going on. General disorder. Chinese don't like that at all. I'm just wondering how long it will be, or if they might just step in a big way and crush, the protests. If they do, that will cause big risk off. Okay. What else we got next week? We can get Brexit news at any time. Are we getting closer to a deal or not? I personally think we're getting closer to a deal. I think the pound, basically is a great buy, especially on the commodity currencies. So quite a few events next week to look out for, and just keep your eye on the stock market. If she does break down, volatility will increase a lot in the Forex markets, in my view. Now, in relation to the pair we're going to look at, which is going to be USD, SGD, I think it's a really good looking risk reward trade, just due to what's going on between China and the US, because the Singapore economy is really getting hit hard by the slow up in China, and it's a very attractive risk reward trade, which I think has got a really good technical setup. Let's go and take a look at it right now. I'm just going to look first of all at USD SGD, the monthly chart, very quickly. Then I'm going to go to the daily chart, draw some levels of entry, stop, and target. Just on the USD SGD monthly chart, just to see our targets, which you can't see on the daily charts. And in terms of the fundamentals behind this pair, they're just out and out USD bullish, which I'll summarize when we go to the daily chart. We've done a video on this one before, and we broke a triple top there. The bodies of those three candles decisively broken. We finish yeah, blue near the highs on Friday, and I'll just draw a quick trajectory in there. So broken out to the upside. Now, where could we be going? My own view is we will go up towards the 145 level. Sorry, I need to get my line straight. There we go. So up towards the 145 level. And then we could run on, could have given you some more candles on the left. There's a big cluster there. Then 151. So we're near enough at 139. If we get to 145, that is 600 pips in that. And there's another 600 pips if we run on to the second target. So 1200. So it's for us a really attractive looking risk to reward trades. Let's go and look at the daily chart and do levels of entry, stop and target. All right, USD SGD daily. Just before we draw some levels, let's have a look at what we consider to be the big bearish fundamentals for Singapore. And they look very bearish to us. The economy is heavily exposed to exports. Okay, now it's got big exposure to China, obviously slowing up, and other Asian nations as well that are slowing. Yeah, real powerhouse economies like South Korea and Taiwan, for example, which don't get as much coverage as China. But yeah, South Korea's slow up is pretty big. That's impacting on Singapore. You can see it in the data. Key exports fell by double digits for the 5th straight month. And the latest figures are 11.2% as a fall. 11.2% is better than the month previous, which I think was 17.4%. But it's double-digit falls for 5 straight months. It's not going to get much better, is it? With the way China is slowing up, those tariffs are biting from the US, and South Korea, Taiwan, they don't look like they're recovering anytime soon. You can see the contraction in the Singapore economy. If you take it on annualized seasonal decline, it's 3.3% in the second quarter. So yeah, really quite a nasty contraction. It's also a major hub for freight. The port, obviously, global trade is slowing up, and obviously there's port income that impacts as well. So not really looking good for Singapore at the moment. You have seen the USD come up, and we've done a few videos on this one actually. We came in at 135.65 and we got above this 20-day moving average, and we took off quite nicely up towards the 139 level. So just over 300 pips for us so far. And regular viewers know this. We're looking for a big bull move. We're looking for the 20-day moving average to provide support in a big bull trend, obviously resistance in a bear trend. We're only just coming back to touch it right now. How would you play this trade? Well, in terms of the key support level, you've got the 20-day moving average first of all. Then you've got the 138 level. So you've got some support on the 20, but yeah, you could come through it. Okay. In terms of buying this one, on a breakout, first of all, you've got the round number there, 139. You've got that spike candle tail there. I think the high is 139.28. I'd go 139.30 in on a breakout, 137.70 as a stop, 160 pips, but 600 pips to the first target if we get there, and 1200 to the second target. And you can see the volatility of these candles is pretty low. You can see on the Bollinger Bands, they've contracted. Low volatility points to a big move. We break out to the upside. It's heavily bullish for the USD in our view. What about if we come down? I would just key off this 138 level. See if we firm up down there. But the way I see it at the moment, looking really for an upside breakout in the next week. But buy on a dip as well. And I like the look of this pair. I tend to like pairs that have got kind of really clear-cut fundamentals in favor of one currency over another that aren't going to turn around anytime soon. And I think that obviously applies in this pair. There's plenty of other great trading opportunities around. I just particularly like the look of this one, so I thought I'd feature it. But you can check my video that I did on Thursday. I will do an updated view
next week. But yeah, trades that we've got, yeah, they're mostly doing quite well. I'm hoping in the coming week they're going to do even better. Yeah, it'll be an interesting week ahead. Yeah, key events in my view, you can look out for those and just keep your eye on the stock market, because if it tanks, then big volatility and a big move into the safe haven currencies. But even if stocks get above that resistance level, provided they don't run away to new multi-year highs, I'd still be bearish of the risk currencies. I just don't see much upside, to be honest, but you never know. Anything can happen, as we know, when we're trading the markets. But we'll see what happens. I'll do some videos in the week, but that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.